What if I told you that behind the chaos of traffic in Mumbai, the political debates in New Delhi, and the digital payments happening in a small village, tea shop, there exists one of the most complex and powerful financial systems in the world. A system that moves trillions of rupees every single day. A framework that survived colonial rule, wars, global recessions, a pandemic, and yet continues to grow. Today on KIYO Documentary, we uncover the invisible engine powering the world's fastest growing major economy, the financial framework of India. And by the end of this journey, you'll see how money, policy, power, and digital innovation connect to shape the future of 1.4 billion people. India's financial framework is not just about banks and stock markets. It is a carefully layered architecture of institutions, regulators, laws, markets, fiscal systems, and digital infrastructure. At the heart of this system lies the Constitution of India, which defines the division of financial powers between the central and state governments. Taxation authority, expenditure responsibility, borrowing limits, all of these are structured through constitutional provisions. This legal backbone ensures fiscal federalism, meaning both the union and the states have financial autonomy within defined boundaries. The Executive Financial Authority rests primarily with the Ministry of Finance, headquartered in North Block, New Delhi. The ministry designs fiscal policy, prepares the union budget, manages public debt, supervises taxation departments, and coordinates economic reforms. Every year, the union budget becomes a national event, not merely a speech, but a signal to markets, businesses, and global investors about India's economic direction. At the monetary core of the framework stands the Reserve Bank of India. Established in 1935, the RBI functions as the central bank of the country. It controls inflation through monetary policy, regulates banks, manages foreign exchange reserves, issues currency, and acts as the banker to the government. When inflation rises, the RBI adjusts repo rates. When liquidity tightens, it injects money through open market operations. Its Monetary Policy Committee determines interest rates with the objective of maintaining price stability while supporting growth. The Indian banking system forms the foundation of credit creation. It includes public sector banks, private banks, regional rural banks, cooperative banks, and small finance banks. Public sector banks, once burdened by non-performing assets, underwent recapitalization and consolidation reforms. Private banks expanded aggressively using technology. The result? A competitive but regulated banking ecosystem under RBI supervision. Parallel to banking lies India's capital market. The Securities and Exchange Board of India regulates equity and commodity markets. Its mandate is investor protection, market transparency, and fair trading practices. The iconic Bombay Stock Exchange and National Stock Exchange of India represent the equity trading backbone. Together, they list thousands of companies and reflect the pulse of corporate India. Through IPOs, rights issues, and bond markets, businesses raise capital to expand, innovate, and compete globally. Insurance and pensions represent another pillar. The Insurance Regulatory and Development Authority of India supervises life and general insurance companies. Pension reforms led to the creation of the Pension Fund Regulatory and Development Authority, managing the national pension system. These institutions deepen long-term capital formation and financial security. Fiscal policy defines how the government earns and spends money. India's tax framework underwent a historic transformation with the introduction of the Goods and Services Tax in 2017. GST replaced multiple indirect taxes, creating a unified national market. It improved compliance through digital invoicing and broadened the tax base. Direct taxes, income tax, and corporate tax remain critical revenue sources. Administered through digitized platforms, public expenditure focuses on infrastructure, defense, subsidies, welfare schemes, and capital investment. Programs like rural employment guarantees, food security schemes, and infrastructure corridors are funded through this fiscal mechanism. Fiscal deficits are financed via government bonds purchased by banks, institutions, and retail investors. India's financial framework also integrates global markets. The RBI manages foreign exchange under the FEMA Act, foreign portfolio investors, and foreign direct investment inflows influence liquidity and currency stability. India's inclusion in global bond indices marked a milestone in integrating with global capital flows. Then came the digital revolution. The creation of the Unified Payments Interface (UPI) transformed India into a global leader in real-time digital payments. Millions transact instantly via smartphones. Financial inclusion expanded through Jan-Dhan bank accounts, Aadhaar-based identity systems, and mobile connectivity. The India Stack became a model for digital public infrastructure worldwide. Financial inclusion is perhaps the most transformative chapter. Through mass bank account openings, direct benefit transfers, and microcredit initiatives, millions entered the formal financial system. This shift strengthened transparency, reduced leakages, and boosted consumption. But challenges remain. Inflation, volatility, fiscal deficits, banking sector stress cycles, global capital flow shocks, and geopolitical tensions constantly test resilience. Regulatory coordination among RBI, SEBI, IRDAI, and PFRDA must remain synchronized to prevent systemic risk. India's financial framework also embraces reforms like insolvency resolution through the Insolvency and Bankruptcy Code, corporate governance enhancements, fintech regulation, and digital currency exploration through the Central Bank Digital Currency Pilot. The true strength of India's financial system lies in balance between state control and market freedom, between growth and stability, between welfare and fiscal prudence. It is not perfect, but it is evolving. As we conclude this episode of KIYO Documentary, remember, financial frameworks are invisible architectures of power. They determine who gets credit, who gets taxed, who gets welfare, who builds factories, and who invests in the future. India's system is a living organism, dynamic, ambitious, and deeply intertwined with global markets. The next decade will test its resilience. With demographic dividends, digital infrastructure, and policy reforms, India stands at a historic financial turning point. Will it become the world's third-largest economy? The answer lies not just in GDP numbers, but in how effectively this financial framework adapts to the changing world. If you enjoyed this deep dive, subscribe to KIYO Documentary, where we decode the systems shaping our future.